Welcome to the program. Today we'll talk about what's happening on the global economy and financial markets right now. We'll get Peter Switzer's report card on earnings season, and we'll take a look at the Switzer Dividend Growth Fund, which is initial offer closes this Friday. I'm Marty Switzer.
I'm Peter Switzer, and we're
mad about money. Okay, Pete, first up, markets last night. Janet Yellen came out and was on record saying that she thought it would be unwise to keep rates on hold, even in light of the uncertainty around the Donald. Your thoughts?
Well, it's good the market still went up. I guess they're not thinking or they're not saying, oh, there's going to be 4 interest rate rises, as some people have suggested. I also think there's a lot of positivity around this company tax cuts talk from Trump. So in many ways, Trump and Janet Yellen, they're in the driving seat together. Not sure who's got...
Financials performing well in the US too, of Wall Street thinking Trump's going to be very good for them. So
exactly right.
That creates a lot of positive sentiment. US market goes up, that should feed through to us, so it should be good for stocks in the medium term.
Yeah, and I think the talk about tax cuts in America means that, we're talking about it in Parliament in Australia as well, and Labor's coming out saying, oh no, you can't give tax cuts to banks and wealthy industrial companies. But I still think the talk's going to be there. And also this regulation aspect, there was a lot of tough talk on regulation after the GFC, and I think since Trump's come along, it's softened a bit, and that's part of the reason why bank share prices are going up. So, all in all, I think we're in a good position in terms of the international economy, the tax cuts implications, and I think what
infrastructure spending.
Yeah, and I think what Janet Yellen said last night also just reinforces the positivity. That's why Wall Street was up overnight.
Reporting season, well underway. Big predictions with mining stocks, recovering, being good for earnings.
Which Rio proved.
Which Rio proved. Obviously, last year was tough, but on the back of mining, this year has been mentioned to be a lot stronger. It's starting to play out now, as you said. The Rio result was positive. Your report card on earnings season so far, and let's also talk about Commonwealth Bank.
Okay, for simple terms, it's like a B bordering on an A.
A B rating.
Yeah, because the reason is I want to see the next week and a half. CBA came out today. It wasn't a bad result. Dividend was up 1 cent. Net interest margin was higher, so less, and that's because they're paying more for money. And BDO Adelaide had the same problem. Interesting to see why the market responds.
So positive jaws for Commonwealth
Bank. Positive jaws. Yep, exactly. So revenues increases are outpacing cost increases. So I think all in all, not bad, and that's probably a B report. I would have loved them not to have the same net interest margin issue, but let's face it, interest rates are going up around the world.
Was Paul Rickard happy with it?
Yeah, he thought it was I gave Paul a call before, and he said not bad. And I think the interesting thing is this: the outlook for the economy is so much better. And it means that interest rates are going to rise. If interest rates rise over the next year or two, that's going to help bank profits.
Pete, we should talk. We've spoken about it a bit. We're really happy and really grateful at the interest in the Switzer Dividend Growth Fund. The offer closes on Friday. For those that don't know, it's an income fund that aims to provide reliable franked income streams, long-term capital growth. We will be investing in the market once the offer is closed. Anything you want to add about the fund and what people should know about it?
I just think that the overall strategy is that we go chasing dividend-paying companies that have a good history of also growing their dividend.
And expanding their dividends.
Yeah, because I think a lot of us can pick dividend-paying stocks. We know the banks and Telstra are great for that. But for diversification, you need a lot of companies. And so we'll be looking for, let's say, 50 companies. And the goal is to try and get around 5% before franking, and we might even do better than that. And also, because they grow the dividends, they have a capacity to have higher share prices. So we actually could get really good returns during good times, and during bad times when markets crash, we expect that dividend will still keep on coming in. And that's what a lot of people want, the reliability during the bad years and nice growth during the good years.
If you want to know more, go to switzer.com.au/invest, and the offer closes this Friday. Thanks for your time. I'm Marty Switzer.
I'm Peter Switzer.
And we're mad about money.